This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. The energy markets are an absolute freefall upward. Let's get you caught up. The 60-second commodities flash. Brent crude has officially surged past $125 a barrel this morning as US-Iran talks hit a dead end. WTI isn't far behind, holding steady above $107 as the market prepares for a long-term blockade. It's the final 24 hours. The UAE officially exits OPEC today, May 1st, ending nearly 6 decades of membership. Traders are bracing for a wild west in Middle Eastern production quotas, starting at midnight. Washington has just pitched a new international alliance called the Maritime Freedom Construct. The goal, a coordinated military and diplomatic push to reopen the Strait of Hormuz by force or consensus. While the world burns, Glencore is mining. They just reported a 19% jump in Q1 copper output. Fund managers are now rotating billions out of tech and into hard assets, calling this the start of a decade-long supercycle. Gold is hovering near $4,600, $4,700 per ounce. Value buying is kicking in as the Fed warns of energy-driven inflation. Now let's go deeper. Trump's rejection of the Iran proposal has formalized what we're calling the dual blockade. Yesterday, we talked about a potential thaw, but today the reality of a dual blockade has set in. Point 1. The toll of uncertainty. Iran's proposal reportedly included tolls of over $1 million per ship to pass. When the rules of the road are undecided, maritime insurance doesn't just get expensive, it becomes unavailable. Point 2. The rise of ghost capital. Because of the blockade, we are seeing the birth of a massive shadow fleet. Traders are using older, uninsured vessels and complex transshipments to bypass the strait. This ghost capital moves outside the regulated banking system. Trump's rejection of this extortion means the strait remains a high-risk zone. For a commodity trader, this is the worst-case scenario. The smart money is moving out of high-volume trades and into logistics infrastructure and hard assets like gold and copper. The TradeFlow take. We are moving from a crisis to a new regime. Watch the shipping insurance rates. They will tell you if this coalition is working long before the headlines do. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.